So here we are. Interesting day yesterday. We did get below this 234, this 234.50. Let me open the chat in case people have questions. Okay. We did break down below this, and we came off a solid dollar, but I thought the reversal pattern was pretty clean. I tried to share that and make sure people participated. One thing that we've certainly found in this market is we come off hard, and then we stabilize and start to turn back up. There's always $1 to $2 of upside from there. So after bottoming in the morning below the support from the last few days, you can see I've kind of marked it up a little bit. There was the low, got hit here in the high 30s. Then we looked for the hold higher at 50. This was after you see the bottom put in, and you see the quick 60, 70 cent up move, you look for prior area of support to see if that holds, which was a little bit above the low and also into the natural 50 cent level. That held twice there and consolidated higher, then broke to the upside above 234. That's what a classic reversal looks like. Eventually, we worked our way up to 235, which was another spot to be cautious because of that's where we failed on the open. We did get above there in the after hours, shorted a little bit just to keep an eye on it this morning. And we are kind of in the middle of yesterday afternoon's consolidation range. So not really, you can say the market's a little bit weaker now. After having spent time really averaging in the 235 to 235.5 area for the most of the last few weeks. We did make a new low in terms of lower low on this range, all the way back to where the move started here on March 28th. And until we get some closes below, I'd say 234.60, 234.50, I wouldn't think of the market having a deeper pullback. And also, interestingly enough, yesterday small caps were very strong.
It was toy market. Private retailer toys are.
Even with the SPYs coming off, small caps never got below 135 on IWM, closed up here at 137. If we go back a couple of weeks ago, we had the big move from 138 to 135.5. We rallied back quickly, and then we had even a deeper pullback from 137.30 to through 134. It took a week, but that down move has been erased here. And now we'll watch, I guess, this one, let's call it 136.80 to 137. We spend some time consolidating below here and then break to the downside. We'll look for a pullback back into this 135.30 or so, about a 1.5 lower from here. So we're getting some good price points to trade off of. Just a question of being patient and waiting for breaks out of those areas. So a bunch of things in play today. I'm going to start with NBIX, which is it got a drug approved. There is no drug that exists apparently for this this disease, which creates involuntary movement. There's a daily chart on it. So it's gapping above 50 right now. Here's a 4-hour chart. Some pretty wild price action. So back in 2015, when it spiked to the mid 50s, even went up to 57 a couple times, just wildly came back down. But now this drug is approved and it's going to they're going to start marketing it next month. So we think that would test this 54 to 58 area up here before they take profits. So that would be my first inclination. So far, initial reaction took it to 49. That was in the after hours. We come in this morning, it's higher, above 50. So buyers still controlling. Let's go to the 5-minute. And ideally in these situations, you'd like a flush back down into this 48 to 49 area. But after moving up from 50 to 51.5, it made another higher low at 50.50. So buyers are really in complete control on this one. It's traded about 60% of its daily volume already in the pre-market. It's going to be extremely liquid. Hopefully, normally has a $1.75 ATR. Hopefully, we'll have at least a $3 to $4 range today. Whether that means 49 is the low, 54 is the high. That would be a $5 range right there, something like that. But keep in mind, we should see at least $3 range on this thing today. And at some point, it should get pretty wild. But right now, very steady, bid stepping up. It's okay to chase these things a little bit, but just understand if it starts ticking down, you have to play defense. Otherwise, you can get caught in $1.50, $2 pullback. The reason why you don't want to be caught in that is, although it makes sense that it would take out this pre-market high and kind of test those highs from the last couple of years, we've seen many times when the drug finally gets approved, some big players will take profits, sell the news situation, regardless of how good the news is. That's kind of the mindset of why you have to be defensive if you get long one of these and starts to pull back. The next one is BlackBerry. So BlackBerry, almost $900 million in reward with Qualcomm. It's a patent dispute. Qualcomm's going to pay the money, and then that's going to be over. They're going to have to pay the taxes on it. So if you quickly check the market cap of BlackBerry this morning and the size of the award, it was about 20% of the size of the company's market cap. Depending on what their tax rate is, let's just assume it's 25%. If you knock off a quarter of 20% of the market cap, it's 15% move. It's up 16.6% right now. Perhaps it's a bit of an overshoot. Now, one piece of information we don't have is if there's anybody, or I don't know if there's any other pending patent litigation where they might have some other windfalls, and people think it's more likely at this point. But certainly, up in this area here in the 9 area, there's reason to believe that people would use that as a sell. Now remember, it gapped up the other day on solid earnings, and after failing at $8, came back into 7.5, got above $8 again. So it does have a history of gapping up, being strong in the morning, and then having pullbacks. So if it spiked above $9 here, baiting it is not the worst idea. Could it overshoot to the upside? Sure. If it overshoots to the upside, would I be worried about it? No. Because again, it's a one-time event. They will have to pay taxes on this money. So it's had a little bit of. Let's look at the pre-market. So right now it looks like the buyers are trying to control it. They haven't really let it go below 880. It opened up here at 880. They spiked it above 9. It came back down into the 80s. People, anytime it drops 90 cents, people are stepping in to buy. So that's kind of the tell to me. Below 90 cents, you buy it. If it drops 80 cents, you have to hit it. And the downside is going to be capped as well because of the size of the award. But I could see it flushing back down to 60 cents or even maybe the 50s once people have taken enough profits, then kind of roll its way back up. The next one is DAL. A very small beat on EPS. They raised revenue guidance. Take a look at the 30-minute. So this one sold off a couple months ago with the rest of the airlines. A little triple top here up at 5170 area. Came into 47.5 to 48 and acted as resistance here. So we're now gapping, it's like above recent resistance from the last couple of weeks. The way I kind of look at it is like this. So you have this kind of resistance zone here, and if it gets through that, you're looking at this. Again, why are resistance zones created? Because people are getting in previously at those prices, and human nature is when something gets back up to an area where people were long, they like to get out. And then that creates natural selling, and others such as ourselves look at those areas to see if there's natural selling, and we pile on, and thus that creates resistance areas. So this is interesting right here. So this big down move started at 47.15. That day went all the way down to 45.60. So if it spiked up to there on the open, that would be a pretty nice spot to enter on the short side. done almost 200,000 shares. Moment trades 9 million. What did I put on the sheet in terms of levels? 46.50,
So
47,
it's on the radar.
45 and a quarter. Okay, I think right on the open, I want to use this 46 and a half to 46.40. I think, okay, so I did put 46.50 on the sheet. I want to see if it continues to hold there. If it holds there, look for that spike into the low 47s. FAST, I didn't see anything particularly bad there. They did close a number of stores last quarter. So perhaps that was the feeling, but they reiterated their dividend.
One idea.
I think we talked about this like maybe a month ago. So it had this big run up from 40 to 45, and it ran up again to 49. Now it's gapping below that 49. Last time it tested, it held. So I guess the first thing in this situation, and again, I don't see anything in the news that was particularly bad though, is to see if people are willing, if it pops back up to this 49 to 49 and a half, if it's sold here. And if it is, that's a nice spot to look for a rollover as well, because all of these people are in from higher prices. A lot of these people are in from above 50. But you can see many times it was tested here, 49.60, 49.50, 49.50. And now it's gapping below. Even yesterday, 49.50 it touched. So we'll see. A little bit of a danger short right here at 48. Cruise, CRUS. So remember Cruise yesterday in the meeting? We said there was no news, and then I put in the chat that Apple had cut off one of their chip suppliers, and then people started to speculate, oh, this could happen to a bunch of other people. So look at the context of this. CRUS has recently run up a lot. It's run up from, in fact, the mid-50s to the mid-60s. People are short this, I'm sure they are. And then they see a negative story and something related to the sector. So in the pre-market, they started hitting bids lower. People are short. Get people to say, oh my God, there's some bad news, but there really isn't. But that's how you get the ball rolling. You're caught short something. There's something in the sector, and they try to like get people seeing prices printing lower, and it worked for the first like hour. You know, I remember right on the open, I got hit. I had a bid here. I got hit for some 20-something shares originally. Then I came down again, and I got more shares. Eventually, it dropped 61 here, so we had a tight stop. I got stopped out, but you can see, put in the low at 1030, held higher, and eventually almost filled the entire gap. So let's keep that in mind for when we see a similar situation again in the future. It's not exactly a scenario that happens every day, but certainly something that doesn't have a real negative catalyst that's going to cause institutions to sell. If it gaps down and it stabilizes, you should see some people step in, and it should look like, you know, bid, higher bid, higher bid, higher bid, back above the key 62 level. That should confirm to you that it has potential to fill the gap. Looking at it today, yesterday, the 62.5 area here was kind of interesting. It took a few times to get above it, pulled back one time before going to 63.5. So have an alert down there. AXON managed to stay above 20 pretty much the whole day, and put in the high in the morning, took out the high, then tried to reverse, but held the 20 or 1990, held it again, but couldn't get above this 2065 either. And then could get below 20 at the end of the day. So you have a pretty nice consolidation here, holding the gap. And so if it continues to hold 1980 to 20 and then gets above 2065, see another 50 cents to $1 of upside from there. So that's it. I'm liking the new software now. If you watch the recordings, they're much sharper, which is kind of nice. And it has the same chat ability, so you can ask questions during the meetings as well. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.